Hey everybody, hey traders, Chris over here. Welcome to a little video lesson on navigating your broker platform. This first video, I'm going to walk traders through TD Ameritrade. And so what you're looking at right here is actually their web-based portal. This is actually very simple to follow. If you download the TD Ameritrade app on your phone, it's going to look something like this as well. It's pretty user-friendly, it's pretty simple, but you can still accomplish everything you need to buy a stock, sell a stock, close out positions, monitor your trades, get into options if you have permissions to get into options. So I'll walk you through that platform. I will also show you what their Think or Swim platform looks like right here. It's a little bit more robust. It looks fancy. It seems like you're a pilot in the cockpit looking with all the heads-up displays and the bells and whistles. So we'll go through both, and I'm going to walk through this type of example on multiple platforms, but for this video, let's focus on TD Ameritrade. All right, so back to the web platform here. If you log in, you have My Account. There's a Trade tab. This is what I'm going to use to go directly into my trading. I go into my Trade tab. If I was going to buy a stock, I would go Trade and then Stocks and ETFs. So I click on Stocks and ETFs, and it should take me to this page right here. So I'm looking to buy and sell. So I have my stocks and ETFs. I have my options right here. We'll go through both. And this is actually a trade that we've taken in a classroom before, in a trading room before, and so let's just review this. So we're going to look at the stock. I'm actually interested in this stock here, APHA. Now, if I wanted to buy the stock as is, I have some options to go through. So I could buy the stock. Let's say I wanted to buy 1 share. Then it would be quantity 1. If I want to buy 10 shares, if I want to buy 100 shares, okay, so I'm buying 100 shares of APHA. You'll see the little stock pop up here on the right-hand side. If it was a different stock, let's say I'm trading Apple, okay, AAPL. You can see that my little Apple chart pops up. It's at 127.75. If I want to buy 100 shares of Apple, then it's ready for me to buy. Or any other stock for that matter. Let's go to Tesla, TSLA, and click out of the box there. There's Tesla at 679.27, so I'd be buying 100 shares of Tesla. Okay, so let's go back to APHA, and this should be trading around $16, $16.29. So I'm looking to buy, let's say I'm going to buy 100 shares. Let's say 1 share. If I'm going to buy 1 share of APHA, the question, do I want to buy it right now? Do I think that 16.29 is a fair price, or do I want to look at a lower price? So for example, if I thought, you know what, I'm going to buy APHA at $10. I think that's a great spot. So I could go to a limit order, set my price at $10, all right? And my time in force, because current price is $16.29, we need price to drop $6 to fill that order. So I would go to my good till canceled. Right now, we have some options here with a lot of these different brokers. You can trade for the current day. I could do day plus extended hours. And so if I'm trading it right now, it's 2 in the afternoon my time. The market's going to close at 4 o'clock. We typically get extended hours into like 7 p.m. or 8 p.m. Eastern time. And then we have pre-market around 7 a.m. prior to 9:30's Wall Street open. If I'm setting a limit order, most of the time I will use good till canceled. All right, and typically good till canceled will mean 60 days from today. So if I wanted to do good till canceled, that means that my limit buy for a $10 share price of APHA is good for the next 60 days. Now you can see here that the date extends out to August. Actually, it goes out way past 60 days. This goes into August 7th, 2021. Cool, that's fine by me. So that's 90 days out, which I'm fine with. If I did good till canceled plus extended hours, same thing. Now, this is not only during normal market hours, but also into the post-market and pre-market for the next 90 days. So in some of those times where it's not during normal market hours, we could still get filled. Let's say that price closes normal market hours at $11. And then post-market, price keeps dropping, or pre-market the next day, price drops down. I could get filled at $10. So if you're able to get filled with extended hours and trade those extended hours, I would like to do that. So I think that if I was going to take this trade just as is, and I want to get filled at $10, I like the good till canceled. That extends me out for 90 days, which is pretty nice. And then I can go good till canceled plus extended hours, and I could go ahead and review the order and submit that trade. Okay, so that would be a limit buy, which means price has to drop for me down to $10. I can get filled on that trade for the next 90 days. If I want to get into the trade right now, so let's say that I don't think it's going to come back to $10. I think 16.29 is a good price. I could actually buy 1 share of APHA right now at market price, which right here, according to this quote, is around $16.29. So I could place a market trade for today and review the order and submit that trade. And that would get me in the market right now with one share at 16.29. If I thought, you know what, price is really choppy, it's not convincing me that it's going to go higher yet, maybe I'm looking for the price to overall go to like $30. But in order to prove that it's going bullish, I want to see if I can get something to trade and confirm around $20. Well, I could set what's called a stop buy. And that means that price, if we have, this is the current price, and this is where I believe price has to go to my destination, I could set a stop buy order. So if price does in fact go through this level, then we're going to trade this up to our profit destination, and that would be a stop buy. So if I did a stop market order, see how it says activation price? I could activate my market buy at $20. So when the stock is at $20, I can activate that market buy at $20. Now, keep in mind, there's also an ask price, which means there's a bit of a spread on some of these trades. So if I put a stop market order in at $20, I might get filled at like $20.10, $20.50. There might be a bit of an ask or a markup on that trade. So if you want to get filled exactly at $20, you can also consider the stop limit order, and you can activate at $20. And you can say, once we hit $20, I want to get filled at $20. And that means that even if the ask price or the spread is slightly higher, if there's any oscillation there that allows my ask price to be 20 bucks on the nose, I can get filled at that price. So if you want 20 bucks, you can do a stop limit, guarantee that $20. If you want to let price cross above $20, then that can be a stop market. So when price is activated at 20 bucks, you can get in that trade. Again, extend this out so you have 60, 90 days. Some brokers do 30 days, but typically you're going to find most brokers with the GTC or good till canceled, good for 60 to 90 days. All right, so that's just walking you through how to place a buy trade on a stock using this TD Ameritrade web platform. What I'd like to do is let's finish up on this platform. Let's go into options. All right, and so first let me give you a little backstory on this trade. There was actually a strategy here. There's an earnings play that my partner and I, Tyson, set up in our Equities on Demand classroom, and we're looking at an earnings play. It's called an iron butterfly. What that means is, it's just a fancy name. What it means is price is right here, and with the earnings play, the earnings will be the catalyst. So when that news comes out, whether the company beats expectations or misses, we're looking for the current price to go up a certain percentage or go down a certain percentage. And so what we do is we essentially straddle that move. So if price goes up, we can benefit from those options. If price goes down, we can benefit from those options. And so typically what we have with this strategy is we will lose on one side of that trade, but we will win on the other side of that trade. So we typically walk away with net profits with these earnings strategies, and typically within, 1 to 2 days of the earnings report, we're usually closing out these trades for profit. So I'm going to go ahead and walk you through this today as an example, and I'll do it through this TD Ameritrade web platform. All right, so I'm going to go into options here, and we're going to find the option strategy. I'm going to go ahead and do a custom leg. Now, I could call this something else. I could call this a straddle. I could call this a strangle. I think this will let me place up to 4 legs of the trade. Let me find out. Let's experiment here for fun. Let's say that this is a straddle. Okay, now right here it says action, order type. I need more legs to this trade. So what I'm going to do, let's try the strangle. Okay, the strangle has 1, 2 legs of the trade. For this trade that we did in our Equities on Demand class, there's actually 4 legs to the trade. So the best way to accomplish this is go into the custom, and we'll just add each individual leg. All right, so what I'm going to do here is this is a custom option strategy. Again, it's called the butterfly. Our underlying symbol is APHA. Okay, and I can also look up the options chain. So take a look at this. Now, what we did inside of our classroom is we have this options chain with the expiration of April 16th. Okay, so I'll go back into my TD Ameritrade. Let's go to the expiration on the 16th, and let's set this out. Let's see as many strikes as we can. Okay, now, the way that we price this, we have calls on one side, we have puts on another side. So what I'm going to do is one leg of the trade, we're looking for the closest one to current price. Now, current price you saw was $16.29. Okay, so what we did on this trade is we looked at, this is APHA, we looked at the $16.50 strike. All right, so right here, we're going to end up buying a call and buying a put at $16.50 because that's the closest to real price. So this is my strike price in the middle. I'm going to go ahead and scroll down to where we have, you can see how right here at $16, in between $16 and $16.50, that is the nearest to current price. And so I'm looking for a call. So I'll go ahead and choose the call, and I will apply that. So that's a buy. I'll do one contract for that call. Then I will add another options leg. Okay, this one, I'm going to do a buy to open, one contract on the April 16th, 16.50, and this is going to be a put. So I'm going to buy one put on the April 16th expiration at $16.50. That is a call. So I'm buying the call. I'm also going to buy the put at $16.50, and then we want to bracket that. So to the upside, we were looking at $20, and so I add another option leg. I'm going to sell the call. So this will be expiration 4/16. This will be the $20 call. So I'm going to sell the $20 call right here. And then I will also add that final leg, and this will be a sell to open. And this will be to the downside. If price drops, then we're going to sell that put. And so this will be the April 16th. This will be down to $13. So $13 here. And this will be a put. So these are the four legs of this option trade. This is how I'm playing earnings. I'm going to essentially straddle it. The strategy is a butterfly. So I'm buying the call at or very close to current price. I'm buying the put at or near current price. And then I'm bracketing, so I'm selling the call at the high price and I'm selling the put at the low price. And those four legs together are probably going to cost me some money, but I'm interested to see what it takes. So if I wanted to look at this would be a net debit because it's going to cost me. Right now, see how it says estimated amount? It's $203. I don't want to pay that much. In fact, we actually got filled on this trade at 1.95. So if I did, see how it says right here that the ask is 203, I can go ahead and set a net debit, and this would be 1.95 right there. And I could go good till canceled. Now, the reason we did this is we actually priced it out to have this be in our favor. So we had a positive profit factor and a positive risk reward. And I could extend this out until the expiration of the option on the 16th. So if I get filled, if I go ahead and review this and place a trade, this is a pending trade. Now, as long as these four option prices add up with their contracts to give me a $1.95 debit, then it will cost me $1.95 for the option. Remember that option contracts represent 100 shares. So essentially, take that $1.95, multiply it by 100, and this is going to cost me $195 to place the trade. Okay, so as long as I have, let's say safely, $250, I can place that trade. Now, obviously, we don't want you to have $250 or anybody to have $250 and try to place this trade. I mean, hopefully we have a couple $1,000s, so it's not just this trade, but we can take other trades. And if we lose on this one, we can still live the trade another day, all that good stuff. So use good equity management. But that's all it's going to require out of a broker platform to take this trade. If we set it up here for 1.95, then it's going to require $195 in actual capital. All right, so I could place that trade, and that would cover taking a trade with APHA, just buying the stock. We reviewed the market orders, the limit orders, and the stop market, stop limit orders, right? Also the options chain, which actually is, again, maybe at a glance it's fairly complicated, but you can go through item by item, line by line, and just make sure that you add the proper legs to the trade. If we were doing a vertical put spread, for example, we would be looking to buy a put and sell a put, and we'd only have two legs of the trade. So you can see here on this spreadsheet, we have some of these different strategies. We have call spreads, we'll have naked puts, we'll have butterflies, we'll have strangles. We're doing some other plays over here where we are placing based on one of our strategies, we have vertical put spreads. So ways to trade it. It's just options, but I'm helping you navigate the broker platform. Okay, so that's half of TD Ameritrade. And the reason why is this is the easier one to do. I use this platform quite a bit. I also use the phone for TD Ameritrade, which is easy to also follow along with these if you're trading stocks or trading options and monitoring things. Once your trades are in, you can also go into your order status. So once you're in trades and you're actively in trades, you can click on order status and review those trades. If you wanted to cancel any of those trades, go into your order status, okay? And if you didn't get filled on a certain trade or you don't want to take a trade, you can cancel that trade. All right, now let's go into Thinkorswim. I'm going to do the exact same thing with Thinkorswim. So let's go into Thinkorswim. Now, like I said, this is a little bit more of a robust platform. If you want more information on it, if you get inside the Thinkorswim platform, they actually have some really good education. They have full tutorials inside of their portal. You could also simply YouTube videos like this and just look specifically at Thinkorswim, and there's probably shortcut videos, or there's little tips and tricks to use it. If you like this type of cockpit and headquarters type stuff, it's a really great platform. I'm a big believer in keeping it simple. That's why I have my YouTube channel, for Keep It Seriously Simple, right? Anyway, if we wanted to buy APHA, it's down here. So I have my stock already on. If I wanted to go ahead and buy it, if I like the price at $16.27, let me right click on it. I could buy this right now. And when I click on buy, this is going to automatically assume that I'm going to buy 100 shares. Now, I'm not going to buy 100 shares. I'm not ready to take this trade. I want to go into a little bit more detail on setting this up the way that I want to set it up. All right, so I will go ahead and edit this. And now I have my entry tools. So what I'm looking for on APHA, let me make sure this is the right stock, APHA, okay. So I would buy the stock, all right, I'm looking to buy it. Do I want to buy 100 shares? Let's say I want to buy 10 shares. Okay, so there's 10 shares. Let's see here. There's my symbol, expiration, that's for options. There's my stock, my limit price. Now, right now, I mean, there is a bid at 16.26. There's an ask at 22.53, maybe, or there might even be like an ask price at 24.65 if that's market. So let's go back to, if I want to buy it at market, let me see what this says here. If I go down to $10, okay, I can set this up. Let me move my little face out of the way. So I will put a limit order in at $10. And do I want to trade it for today? Well, if I'm obviously letting price drop or needing price to drop, then I would have to go good till canceled. Remember, if I want to go good till canceled with the extended hours, I can do this GTC_EXT for good till canceled and extended hours, right? Anything else, that should be it. I can go ahead and confirm and send the trade, and that would be looking for a limit order to buy APHA at $10 a share, and that would be for 10 shares. Okay, if I wanted to trade something else, let's say that I wanted to switch the symbol. Let's say I want to trade Tesla. Okay, so there's Tesla. If I wanted to right click, if I wanted to buy Tesla. Okay, do I want to buy 100 shares and spend $72,000 on Tesla? No, so let me edit this. Let's go down to our order entry. I would buy the stock. I'll probably take, let's say, 2 shares of Tesla. Okay, 2 shares of Tesla. I would be setting, let's say I want to set a limit. I really like the price at $500. So $500 limit order would be good till canceled plus extended hours. And I could confirm and send that to my broker platform for a limit buy on Tesla. Okay, so just simply buying and selling. You can click on the stock here, right click, and then go into, you can buy custom if you wanted to set it up with a limit order. You want to set it up with a stop order. If you want to have something where you buy above or sell below, you can do that as well. So there's this one cancels the other type order. That's what OCO is. You can set alerts. Like I said, if you want more tips and tricks, do another YouTube video, or inside the platform, go to education and watch some of the tutorials on navigating your Thinkorswim. What I'd like to do for this is also go into the options chain, and let's set up that earning strategy on APHA. So what I'll do here is I'm going to go into my trade tab and go to all products, and then I'm going to click on the options chain. Now I'm interested in APHA, and in the options chain, if I expand that, okay, what I'm going to take a look at is inside the options chain, we have a couple of extra features to get all the different option chains that I want, or look at all the different options that I can trade. So when I go into the types here, I do want to see all of the different option offers. So regular option offers, quarterly option offers, and weekly option offers. So a lot of these with earnings, I'm looking for weekly option plays. Also with the strike price, it might only give you 4 strike prices, maybe 8 strike prices by default. So I want to go to the minimum and maximum and see all of the different strike prices, right? So that should be enough for me to have these extra options available. And really, if you've seen kind of one options chain, you've seen them all. They are pretty similar. What you need to identify is identify your expiration, identify the strike price. On one side, typically on the left column, you're going to have your calls, and on the right side, you're going to have your puts. So let me move myself down here again. And so can you see this? We have the expirations here on the 16th of April, 2021. We have the strike price that actually starts at $2, and we're interested in that $16.50 strike right there. And we have our calls on the left. We have our puts on the right. All right, so what's interesting, just kind of going through the platform here, I was trying to actually use the butterfly strategy, but it turns out that in Thinkorswim, you can get the same setup. So remember, we need 4 legs to this trade, and I can do that with the iron condor. So that's why the names are so silly. We just have to know that if we get 4 legs to the trade, we can set the strategy up. So we're going to buy the 1650 call. We're going to sell the $20 call right here. We're going to buy the 1650 put, and we're going to sell the $13 put. So if I go ahead and click, this is my option chain. If I right click and I go to sell or buy, see how it has all the strategies? I'm going to go ahead and do a buy for the iron condor. And now it pops up with all of my legs. Now what's interesting, you see there's a buy side and there's a sell side. There's a buy side and there's a sell side. Now you see how there's 2 calls and there's 2 puts? So we're going to buy a call, we're going to sell a call, we're going to buy a put, we're going to sell a put. So this is actually the strategy. So that doesn't mean I'm going to change it, because some platforms say that it's a butterfly, some say that it's an iron condor, but we have 4 option legs, and we're going to go ahead and set it up now. Okay, so for the buy, we're going to buy a call at 1650. We're going to sell the call at $20. So I'll scroll down here to the $20 strike. So I'm buying the call at $16.50. I'm selling the call at $20. I'm going to buy the put at $16.50. And I'm going to sell the put at $13 right here. All right, so now this is all set up. Let me move myself out of the way so you can see the remainder of this chain, or this option setup. And it has right here that I would be looking at a debit price at $1.93. When we took the trade today, take a look at the spreadsheet. Let me minimize this. When I took the trade today in the spreadsheet, we were actually at $1.95. So right now, if I took this trade, it would actually be 2 cents cheaper to place the trade. So I can do this now. See how it's fluctuating? This is $1.94. I'm fine with taking the trade. If, let's say that you were typing this in and it was $2.05, what you want to do is you would want to set the price at $1.95, or set the price at whatever acceptable level it is. Again, we do this in class. We do this in Equities on Demand. We walk all the traders through it. These are the trades that I'm placing. These are the trades that Tyson are placing. So anyway, that's it. So we set it up. It fits the parameters. This would be a good till canceled. And because we're within the levels, we could take the trade right now. I would then confirm and send, throw it in the broker platform. All right, so I think that is mission accomplished for TD Ameritrade. Again, this is Thinkorswim. I thought it would be easier to walk through their simple version, which is their web portal. So, and again, maybe traders prefer this. Maybe it's easy just to pick the trades, follow the spreadsheet with us, place the option trades here. You can have your buy to open, sell to open, buy to close, sell to close when you're done with the trade. You know, just going into buy and sell, you click on stocks and ETFs under the trade tab, type in your symbol, how many shares you want to buy. So we have short-term strategies, medium-term strategies, long-term strategies, but Thinkorswim, a little bit more of the, the cockpit headquarters dashboard type feel. And truthfully, some traders love it. Other traders are a little bit intimidated by it, and that's totally understandable. Remember that these platforms also have tutorials, education portals, and so if you're learning how to navigate this, if you're learning how to look up certain, tools and permissions, take a look at the education portal inside the platform. Go to education. And I'm pretty sure that there are hours and hours and hours worth of things to learn, and you can know this platform inside and out, have a lot of fun with it, right? Otherwise, keep it simple. So if you have any questions, let me know. I will include some links. So I know that, I've mentioned this Equities on Demand stuff. I will include some links in the description here. If you have any questions, inside the description note, there will be a webinar to learn more about Equities on Demand. If you're interested in joining and trading with myself every single day, myself and Tyson Clayton every single day, there will be a link to also check out Equities on Demand and purchase it and be a subscriber member to the course and watch us trade every single day. So that's it. If you have any questions, let me know. Leave a comment, smash the like button. That'd be awesome. And I'll see you in the next video. Thanks a lot.